Please let's start with an outlook into 2024. As 2024 has begun, we continue to see a change in the global supply chain, along with political, economic, and climate challenges. Few examples we are seeing is the Red Sea pirate attacks on cargo ships, which is causing the vessels to take the long delayed road around Cape of Good Hope, which is the southern tip of Africa, and another one here in the Americas, actually similar impact is El Nino, which has caused a big drought in across like Central America. And the Panama Canal is now running at a reduced capacity of only 24 ships daily, which also has caused huge delays, and the fact that a lot of vessels have to go around Cape Horn. So yeah, companies continue to explore different avenues to diversify. And at this point, we're seeing a lot of European companies investing in the US and establishing more production sites also here. And US companies actually establishing production sites closer to shore, which is in Mexico, and also neighboring countries diversifying their supply chain. So in addition to that, we're seeing an interesting also development where Europe, a lot of European nations had to cut back on their gas supply lines as the Nord Stream 1 and 2, unfortunately, is no longer active. It's also Russia is sanctioned at this point in time by the NATO and basically coalition. But it led actually, funny wise, also to Walid's company, I'm pretty sure, like to an uptick, as a lot of these supply chains are now actually replaced by Middle Eastern countries as well as the US. So again, and last but not least, I would like to mention, like we continue to see like a shift from China to Southeast Asia, which is mainly because of the large discrepancy in labor costs between those two regions. So yeah, it's up to us to advise our clients to ensure all of their assets and liabilities arising from these new challenges, and to service employee benefits for their employees wherever in the world they are. At the beginning of May, I would also like to mention, we hope to see you in San Diego, where we are arranging for meetings with you during the RIMS conference, which takes place from the 5th to the 8th, and hosting a TRC appreciation dinner on Monday 6th. So yeah, now it's actually time to get going. So in the last session, many of you asked that we feature an Asian territory in our next edition Around the World with TRC today. That's what we're going to do. So we're very, very pleased to welcome the group CEO of our longstanding TRC partner, Associated Insurance Consultant, Walid Neme. Thank you, Walid, for being here today. From one of our Middle Eastern partners, to present an overview of the economic status and the insurance markets of the Middle Eastern region. But it will also educate us regarding specific subjects that play a significant role in how placements are conducted within Middle Eastern countries, e.g., for example, Saudi Arabia, and illustrate the capabilities of associate insurance consultants in different countries within the Middle East, as they have offices not in more than one country. Yeah, for housekeeping, we will we'll send you copies of the presentation after the session. So yeah, please send us questions which we will answer after the panel discussion. So please use the Q&A function by that time at the bottom of your screen within the Zoom window. So, and here we go. So I'd like to start actually with a quick poll where I would like to launch actually two questions here. So the first question is, did you ever come across a client's coverage request regarding the Middle East, which means could be UAE, United Arab Emirates, which is Dubai, Saudi Arabia, Qatar, or maybe Israel? It could be, there are many other countries, but we would like to have a warm-up and see how you're feeling. Okay, no, okay, it's kind of really divided here. I see that. So we're having quite a few participants, Walid. So we have a divided crowd. So we have half of the people who already had some experience, and the other half did not. So that's good to know. That's good to know for you, Walid, when you're also going there. And then we have the second question: how many people live in the Arab countries? And Walid will tell you actually what actually the answer
Yes.
to that. So because that's actually in his presentation. So yeah, so I see. Yeah, here we go. So I want to end this right now. And so yeah, so that we, but I thought this would be interesting for us to have actually as at the beginning of this presentation we have. So yeah, at this point, really, I will actually share the screen, and I hope everybody can see like the screen. Here we go. So, and the floor is yours, Walid, please.
Yes, thank you. Thank you, Christian. Actually, two quick things before I start. First of all, I would like to thank you, Christian, for organizing this webinar about the Middle East. Associated is a very proud TRC member, and we use always the slogan, "We are TRC." And the second thing I would like to mention, I am sorry to speak today also about a region which you see every day in the news, every night in the news. So, you know, the changes in the Middle East are very quick. There is always something on the news every night. So, as you said, we will start with a macro overview about the economy. Then we'll speak about the benefits landscape in the Middle East, then the property and casualty benefits about, the property and casualty market situation, and we will close with a couple of minutes about what is AIC and what we do. So basically, as you can see here, you have about 425 million population in the Arab countries. If in the Arab countries, Egypt is by large 1.105 million. This was at the time we did the presentation. I'm sure every minute this is increasing. I made this slide actually to highlight what is shown in the third column. So if you can see in Saudi Arabia, more than 30% of the population are expatriates. In UAE, about 90% of the population are expatriates, and approximately the same in Qatar. This is a common feature across all GCC countries. The GCC countries are Oman, UAE, Qatar, Saudi Arabia, Bahrain, and Kuwait. So, and this is a common feature among these countries. Another thing that I would like to highlight at the beginning also is the GDP growth I mean the GDP in those countries compared how it's what are the opportunities, why they are attracting investments. If you look at Saudi Arabia in 2022, it was 8%. In 2023, the forecast was 3.7%, but actually it was much more than this. If you look at UAE, it's 5.6% and 4.1% in 2023, and a very small number of countries are doing this GDP growth every year. So there is a lot of opportunities now in the Middle East. This is for the GCC countries. If you go to countries like Lebanon or Egypt, the economic situation was not so good, especially in 2023 for Egypt because of the hyperinflation. But for us insurance people and insurance brokers, hyperinflation is an opportunity to create pension funds, to create things, medical insurance, increase the limits on property and casualty to keep people, well covered. Now, for the GDP per capita, if you look on the right side of the G20 countries, when you look at the G20 countries, you can see that Saudi Arabia sits well in the middle with, okay? And if you look at the European Union, then dollars in thousands, and then you go to the map in green, you can see, for example, UAE with 77,000, Qatar with 115,000, which is number two after Luxembourg, and the rest, you can see that there are real opportunities like Kuwait, Bahrain, 57,000 for Bahrain, 51,000 for for UAE, sorry, for Kuwait. And this is, I mean, this is really good for these countries. Speaking about the benefits in the Middle East, first of all, in view of the large number of expatriates in the Middle East, I would like to speak a little bit and give you an idea about the remuneration package the compensation and remuneration package that expatriates would be entitled to and is paid to the expatriates in the GCC, particularly in the GCC countries. So there are three different packages. When you say the first one is an expatriate package, is when a company hires an employee according to the salary scale in the home country. For example, if you are hiring a US national by a US company and they are asking this US national to come and live in Qatar, for example, on the package designed for USA. Okay, this is the first one. The second one is local non-national. So that would be a package which is designed on local conditions. So how much you would be to have a decent life in the country where the expatriate is assigned, and that we call that a local non-national or local plus. So this is what you get in the country itself. And the last one is the expat light, is something between both. Actually, the difference recently between these packages is shrinking, and they are coming close to each other because the level of life has increased a lot, especially in countries like UAE, first, and then Qatar and Saudi Arabia. So now the level of life is becoming very expensive because of the increased of the enhancement of the living conditions, which is bringing and shrinking those packages and bringing them to a certain alignment. When you understand the compensation packages, you would be able to understand how the remuneration is built in those countries, in GCC countries. First of all, there is a basic salary, a basic pay, and this is very important to understand because the end of service gratuity that you all hear about is based on, mostly in those countries, based on the basic salary. And then there are allowances, transport allowance, housing allowance, air tickets allowance, telecommunication allowance, okay, because expatriates do travel back to their home country. And these allowances may vary depending on the segment of activity. For example, financial institutions, technology firms tend to offer the highest packages compared to the hospitality and construction industries who offer the lowest packages and remunerations. If you come to the nationals, they are entitled to a similar scheme, but for example, in some countries, housing allowance would be higher than others for local nationals compared to expatriates. The air tickets are not given to nationals because it's their home country. They don't need to travel to their home country, and so on. But this is basically how the salaries components are distributed. Okay, to have an idea about benefits, how benefits are there. I would like to add on that a major component of the benefits in Egypt is pension schemes. So because of the devaluation of the currency, and it's very common, and employees and unions always claim and request for pension schemes to protect their end of service indemnities. Because the social insurance money is devaluating and getting dilapidated because of the devaluation of the currency, quick devaluation of the currency. There is a trend in the GCC countries, which we call nationalization, which means it's not that the government is putting its hand like the former communist bloc. It's not that. It's putting a quota on employers, on private employers to employ nationals, okay? So basically, this is called in Saudi Arabia, Saudization, and UAE is Emiratization, Kuwaitization, and so on, Omanization, and so on. I'll speak about the main four. The main one is Saudization. Saudization is a quota that, depending on the segment you are working in, for example, it's different between financial institutions and construction, or transportation, whatever is the industry, they have a share that they need to fulfill. For example, for us insurance brokers, we start with a ratio, and then after certain years, we have to be at more than 90% Saudization. And now our company, we are at 95% because of the regulations, and we are fulfilling it. In companies with less than 10 employees, they are exempt from the Saudization program, but they would still need to employ at least one Saudi national. In the insurance industry, for you to know, recently, last December, the regulator decided that there is no more expatriate in the sales industry and in the sales departments, and all the sales people have to be Saudis, and so on. So just to give you an idea, HR people in all companies have to be Saudis, regardless of the activity. So there are also specific positions kept only for Saudis. Emiratization, this is starting this year. Before end of this year, every company with 50 employees should have at least 2% of employees, means one employee. Okay, before end of year, they have to have one UAE national as employee at least. And if you fail if your client fails to comply with this, they will be subject to fines. In Saudi Arabia, it's much more difficult. They would stop the license. So you would not be able to carry any works if you don't fulfill. Of course, you get first a warning. There are colors: premium, green, yellow, red. If first you are downgraded to green, then downgraded to yellow if you still don't comply, and if you are in red, you cannot operate anymore. This is basically Omanization. Is also there are quotas depending on the industry. And the insurance industry, it should be 75% of the workforce should be Omanis. And there are different other programs, similar programs in Qatar, Bahrain, Kuwait, not so strict, but there are still some sort of nationalization policy imposed by the government. All this is the purpose of reducing unemployment. And this started in 2011, starting from 2011, when the revolutions started across the Arab world. So the governments paid attention that there are so many people unemployed, and they wanted to impose some employment ratios on the private sector. Now, there is, I'm sure most of you know that there is compulsory health insurance in the region. It started with, actually it started with Kuwait long time back in the 60s, but Kuwait put hold later on the compulsory medical insurance. The law is still there, but it's not enforced. Abu Dhabi took the lead in 2006. Saudi Arabia in 2007, Dubai in 2014, other UAE Emirates in 2023, but today they issued a federal law that starting 1/1/2025, all the benefits across UAE will be compulsory, and they aim by that the other UAE Emirates, the 5 other UAE Emirates. And we believe that it will be federal, so it will be unified across all UAE, the same scheme. In Abu Dhabi, the employer has to pay the premium for the employee and the dependents, and up to one spouse or one partner and 3 dependents in UAE. Above three children, it will be the employee himself or herself would need to pay for the premium. In Saudi Arabia, regardless of the number, actually Saudi Arabia provides one of the most generous compulsory health insurance plans in the world, most probably, because this includes, first of all, the employer has to pay 100%, no premium contribution, not allowed. In Abu Dhabi as well, no premium contribution allowed. But it covers inpatient, outpatient, then doctor's visit, ambulatory, mental diseases. It covers drugs and medicines. It covers dental. It covers optical, chronic diseases. So it's very, very, very wide. It can cover Alzheimer. So it's very, really, it's a generous plan. Abu Dhabi and Dubai cover almost the same, but dental and optical are not compulsory, are voluntary benefits that employers can decide to offer. Dubai, it's compulsory for the employer to pay only for the sponsored people. Sponsored people means people under work permit, so only employees. The market practice in Dubai that employers are paying even for the dependents, but the law requires only for the employees, to cover only employees. Other compulsory health insurance is underway in other GCC states. In Oman, we are expecting it in August or September. Actually, every 3 months, they say it's in the coming trimester, but now the government is assuring that it will be in August. And they are, but now it's not compulsory, but there is a compulsory medical insurance conditions. So if you buy medical insurance, you decide to buy medical insurance, there are minimum conditions that insurers cannot offer less than these, okay, to keep a certain standard. In Qatar, it's underway. They started by first they were accepting non-admitted medical insurance couple of years back. They stopped this, and you have to buy now medical. If you want to buy medical insurance, you have to buy it from a locally admitted insurer, licensed insurer. And on top of this, there was a medical card that you buy from the government. It was imposed on everyone. Now, if you show proof of private insurance, they would waive the Hamad card, the government card. Social insurance in the Middle East is limited to nationals in the GCC countries. And this is a very special scheme, because if you are a GCC national working not in your country, but in another GCC country, still the employer would need to enroll you in your home country social security, but through the local social insurance in the country where the employer operates. For example, if I am a Bahraini national working in Dubai, the employer has to enroll me with social insurance with the General Organization of Social Insurance in Bahrain, GOZI, but I pay to the General Social Insurance Organization in UAE, and they would pay internally. They are linked, and they would pay to each to the others. Actually, we do a lot of work on this side because we assist our clients. It's very complicated, so we assist many clients in doing this job of enrollment. The social insurance, as I said, is limited to GCC nationals, except in Saudi Arabia. For work-related accidents, you have to enroll, the employer has to enroll also the expatriates, okay? But still, even with this, most of the employers would buy private workman compensation insurance. In Egypt, expatriates are enrolled with the social insurance, so it's not limited only to Egyptians. If you employ expatriates as well as Egyptians, you have to enroll them. In Jordan, the same. In Lebanon, they are exempted. Expatriates are exempted. Mandatory to, then if you go to another regulation which has come in force in 2023 on 1st of January, is the compulsory unemployment insurance for everyone. national or non or expatriate. Actually, today I was reading in the news, because there are so many expatriates in UAE, they come to work. There is 7.2 million person enrolled, and this is 70% of the whole population. 7.2 million, the government of UAE said yesterday, are enrolled in the unemployment insurance scheme. It's very cheap. The employee has to pay it, not the employer. Okay? It gives 6 months of coverage in case of unemployment, of course, of termination, not of voluntary unemployment. If I submit my resignation, I will not be entitled to anything. Okay? And it has a limit of 20,000 dirhams. Of course, not full reimbursement. I believe it's 65% of the last salary is paid to the employee who is terminated for 6 months. There is a compulsory private pension scheme in the DIFC. DIFC stands for Dubai International Finance Center. So there is in the GCC countries, for the expatriates, since they are not enrolled in the social insurance, there is a scheme called end of service gratuity. It's almost approximately the same. It may differ from one country to another a little bit, but it's a end of service indemnity paid based on the number of years of service. So this scheme in the DIFC, they said the employer will not put it on their liability side of their financial statements. They have to subscribe to a compulsory private pension scheme. Currently, it's run by Zurich, but there is nothing which forbids from any other insurer to come and apply to the DIFC and do their own private pension scheme, and start selling it for the DIFC. A couple of months back, the government in UAE saw that this is something really good and doing well in the IFC. So they issued a law allowing employers to set private pension schemes to transfer also the same liabilities regard provisions for end of service gratuity that are on the liabilities of the financial statements to private pension schemes. Okay, the rules how to do this is still to come. It's still to come, and we are keeping you all updated. We issue regulatory updates, so we'll keep you updated about this. Actually, we are going to release one before end of this week about the recent developments about this. If we go to property and casualty, this is a sheet showing the compulsory insurances in each country. Of course, as you can see, I have put note. Note means unemployment insurance is compulsory, as I said, but it's not. It's compulsory, but only there is a pool of few insurers who are doing it. And it's not compulsory on the employer, it's compulsory on the employee to do it. Property insurance is not compulsory, but we can see that in most of the free zones, and most of the companies in UAE open in free zones. So some of the free zones impose part of the license to have a property insurance, to have a workman compensation insurance, to have a liability. Either the three of them, or for example, in some of them, in one of the free zones where we operate, we are obliged to provide workman compensation and liability only. We are not obliged to provide property. So it depends really on the free zone. Also, I put note because in the rent agreements, if you are opening outside the free, if you are operating outside the free zone, most of the rent agreements would require you to provide such insurance. So this is becoming like some sort of compulsory. Of course, your TPL is compulsory. In Saudi Arabia, marine cargo is compulsory, and it has to be bought locally. So you cannot bring the cargo through the customs unless you show a proof of private insurance, issued certificate of insurance, marine, issued within Saudi Arabia. This is for import. Okay. Workman, yeah. If you go back one second, Christian, yeah, to the previous slide. Okay. Just would like to mention in Egypt, the travel insurance is compulsory, and this is part of the Egyptian passport. So when someone goes and takes a passport, Egyptian passport and Egyptian national, there's always travel insurance with it, done by a pool of Egyptian insurers. Okay. Anyway, if you need any other question about this, we are always available to provide and explain what is major trends and major trends in the Middle East. The IFC Center attracts many multinationals, financial institutions, and among them insurers, reinsurers, brokers. So you can see in the DIFC, you have Lloyd's office, you have Zurich, Allianz, Tokyo Marine, Cigna, MetLife, whether EB, non-EB, all the big AXA XL, all the big multinationals, they are there. There is a trend now pushing insurers to retain more premiums and not rely on reinsurance. And this is, for example, in Saudi Arabia, there is a regulation that each insurer should show at least in the local market, at least should show, maybe not place, but should show at least 30% of every risk in the local market, whether on fact basis or to Saudi reinsurers or insurance companies. Something similar in Oman, encouraging insurers to show something similar. Egypt now, they are looking to establish a local reinsurer and so on. There is one in Oman. So it's not yet compulsory, really compulsory, but they are pushing and encouraging insurers to do so. There is a big consolidation of mergers. Every month there are a couple of insurers who would merge. So it's a big wave, especially in UAE and Saudi Arabia, Oman as well. Many multinationals withdrew from the markets in the last 4 or 5 years. AIG, for example, withdrew from Qatar, Egypt, and Lebanon, Allianz from Lebanon, and from Saudi Arabia recently also. AXA from all GCC countries, RSA from GCC countries. AXA sold to a Kuwaiti company. By the time they were selling to the Kuwaiti company, Fairfax in Canada came and acquired that company. So they are not directly anymore. They are still present through investments. Most of them have partners in all the countries. Most of them, they have partners. And we can guide you whenever you need a partner of an insurer, we can do that. Some of the challenges or advantages that is changing. There was a couple of years back a big lack of capacity for cyber. Now it's declining and we are seeing increased capacity in the market. Financial lines rates are stable. Property insurance rates, because of what Christian said at the beginning about global warming and natural disasters. So they increased by almost 300% over the last 5 years, especially in UAE and Qatar, especially, and Oman recently. Oman there's not really a history of large natural catastrophes except in Oman. Oman is a more tropical, so there may be 1 or 2 cyclones every year, but not of the scale that you see in the Caribbeans. Motor rates becoming very soft. Now we see that they reach the bottom and we are start to see some hardening. About us, very quickly, we are an independent, as I said, very proud TRC member. We do general lines, we do employee benefits on the general, of course, and we have a reinsurance brokerage arm operating out of Dubai. Established in 2001, partly owned by people who work in it in the company. And if you go to the next one, Christian. So we are present in 9 countries, as I said, 1 office per country for the small countries. For the big countries and big economies in the Middle East, like UAE, we have 3 offices, 2 in Dubai, 1 in Abu Dhabi. In Saudi Arabia, we have 3 offices, 1 in Riyadh, 1 in Jeddah, 1 in Dammam. In Egypt, we have 2 offices in Cairo and in Alexandria, and the other countries, they are really small countries, so we have 1 office per country. We do 98% of our business is commercial lines. General lines is 44%. Benefits is 54%. Personal lines, we do very little, 2%. We acquired recently a company in Dubai. We decided to keep it separate, which does only personal lines via technology platform. We acquired it in last December. But we will keep the personal lines very well focused under this company. We do it just to accommodate our clients. On the general lines, we do the normal brokerage. We have our bespoke wording developed over the years. We offer risk management services as well. On the employee benefits, we do the brokerage. We do the full spectrum of brokerage, scheme designing. We do claims administration, the full administration, after sales service, benchmarking, audit of benefits. On the consultancy, we do remuneration and compensation. We do surveying. We do employee assistance programs. We do wellness programs, regulatory updates, markets reports. So full spectrum, 95% of the services, whether on risk management or on consultancy, is done in-house. We may use some specialized outsourced companies whenever it's really something unique or so we use tested parties that we know very well and that can provide good service. Part of the risk management, we do identification of risks. We help clients mitigate risks. So that's basically the services we do. $200 million of premiums, 20 million of revenue across the Middle East, about 200 employees. We crossed actually 200 employees recently, 48,000 insureds. This is 2023. And finally, on the last slide, that would not be my photo. If you look at it carefully, I think you will know the person.
Thank you so much, Walid. I mean, I think this was extremely informative. Yeah, and it's true. It's not your photo, it's mine. But we really thank you.
I know this guy. I know this guy. He's a very nice guy.
Yeah, so yeah, the reason why we're putting this up here is, of course, we want to promote the Middle East, but we also promote like the entire real universe of placements for TRC all across the globe. So yeah, if you have also requests outside of the Middle East, Africa, Europe, Latin America, wherever you really have a need on Asia, then of course you can always contact us, and that's why we put out this information here for this. But like I said, this has been great. So yeah, and it's really that's, like I said, it's been very informative. I'm always very amazed about it, and we already actually see one question. I have one question for you, buddy. So this is one where like we actually said, do you see growth in projects like NEOM, Asian Winter Games, possible FIFA World Cup, and similar events in countries of the Middle East? How will Giga projects affect the territorial region of Middle East? So yeah, so what is your opinion on that?
Yeah, actually, it's a very good question. Maybe I should have tackled this during the presentation. Actually, there are a lot of investments in the Middle East. There was Expo 2020 in Dubai. There is now NEOM, and there is actually a very big project, $35 billion in Egypt, an investment by UAE. There are the several sports and concerts events, big concerts events. Now the cultural life also is very booming. You have every week a concert by Andre Rieu, by Bocelli, whatever, so on. And it's across all the region. It's not limited to one country. Mostly it's in UAE, Qatar, Saudi Arabia, Egypt, Lebanon in a lesser scale. And this is and you know, when you have investments coming, whether on the construction, on the event, this brings a lot of insurance with it. lot of insurance with it. There is the World Cup for equestrian racing, so a lot of events coming, and this brings, yes, a lot of insurance. Of course, the organizing parties, part of the tender, they would require insurances that have to be provided, and this is provided. Yeah.
Yeah, that's very interesting. No, really appreciate like your insight on that. So there's another one I see here. It says how you compare Saudi Arabian market compared to other GCC countries in lines of insurance, especially railways and aviation lines. Like having said that, I actually have some background from my past. You might know, but like back in the days, there was actually the talk. I don't think it materialized that Deutsche Bahn, German railway, was supposed to actually assist and put like a huge railway in the GCC countries and I think parts of Saudi Arabia. So very curious to hear your answer on that.
Yeah, absolutely. Actually, the Saudi insurance market is is not mature. So it's mostly till now 85% is medical and motor. For the medical and because medical and motor is compulsory. Now we see an increase in property and casualty and the general lines because it's becoming now part of every project to provide professional indemnity, to provide liability, to provide workman compensation. Rates are still low on the property and casualty. So we are seeing now, we started to see some hardening on that, but definitely the role of a broker is very, very, very important in Saudi Arabia because of the lack of awareness. So, for example, I'll give you an example. There is a Saudi fund which provides loans to companies and entities who would like to establish manufacturing in Saudi Arabia. They help them and they require them to bring property insurance for the assets, which is normal to cover the loan, but they don't ask them to provide liability insurance. And those, they are in industrial zones. So if someone has a fire, for example, it can spread to the next manufacturing plant, and then they will not be able to give back the loan. It's not only about assets, it's also about liability. So this is why I'm saying the market is not mature. So we have a lot to educate people. On the aviation side, there are big opportunities in Saudi Arabia, very big opportunities. Actually, there is a new airline starting, Air Riyadh. We are tendering for them now to see what we can do. Because there are huge investments on the aviation. So the aviation market is growing. The problem now with the aviation and with the very specialized lines is that, as I said during the presentation, no more expatriates allowed to sell any line of insurance. And the big brokers who used to bring their specialized teams, their teams from London or from I don't know where to come and present for aviation or for energy, they cannot do it anymore. They have to build local capabilities, and this is an opportunity for us because now we are competing with them on the same level. We have to build teams. They have to build teams. We'll see how it will work. So
Well,
this is if this was about aviation, this is the answer.
Yeah, and I'm very glad to hear this because again, like we, as you know, like we position, I think all of us as a TRC community position ourselves as I think a phenomenal alternative to the alpha brokers. And it is my firm belief that in the middle market and even upper middle market, I think our solutions are the better ones. So it's really great to hear that you actually enable our partners also to compete here with the Aons, Marshes, and Willises of this world. So there is actually one more question I received. We just recently received one more. It says GCC main focus of reinsurance to Europe markets or American markets. In other words, is it where does it go to? I mean, like it's probably a little bit of a tricky question because, like again, I think it probably depends on where the reinsurer is coming from. Right, Berkshire Hathaway is obviously an American capacity, while Munich Re would be a European. So, what kind of reinsurance do you see? Like, do you see more coming from Europe entering the Middle Eastern markets, or is it like divided up between different reinsurance basic companies?
Look, traditionally, until now, insurers in the GCC countries and even in Lebanon, Jordan, and Egypt, all of them, they are quite similar. They rely a lot on reinsurance and they don't tend to retain premiums. So most of their whether obligatory or facultative arrangements, they rely a lot on reinsurance. Now, which markets? Mostly it's Munich Re, Swiss Re, it's European market.
Mhm.
In a lesser extent, the US market, mostly the continental European market. They would go to London a lot for specialty lines, a lot for specialty lines and for financial lines. So for FAC, mostly they go to the London market. For the obligatory markets, they use Munich Re, Swiss Re, Zurich, AXA, whatever, CCR, MAPFRE. So all the big European companies, they use them. Of course, in USA, they would use mostly BHS and other players, Everest, whatever.
Yeah. So it also, do you also see Lloyd's are also in your market? Because in certain countries, for
Lot
example,
on specialty lines.
yeah,
When I said London market, it's Lloyd's, mostly
Lloyd's.
Lloyd's, especially on specialty lines and on financial lines.
Interesting. That's yeah, like that's something we see also in other countries, like the share, right? Like Australia, Canada has a huge influx, and even of course the US with excess and surplus lines, as a lot of you might know. So yeah, there's one more question. So it's like I said, it's got a lot of interest today. So that's great. So it says associate alliance consultant is available in Asian countries, China, Korea, India, and Pakistan. So is that correct? Is that a correct
No, no,
statement?
no, 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 no. No, no. Associated Alliance is the name of our holding company,
Okay.
which does not do insurance. The holding company is just our arm, which owns the subsidiaries, and it's based in Dubai. Associated Alliance. The companies that we own, for example, in UAE, it's called Associated Insurance Brokers. And we have three brand names that we use, and this is for regulatory reasons. For example, we have Daman in Saudi Arabia, associated in Lebanon, associated in Egypt. We wanted to use, we have Synergy, which is our insurance brokerage arm. We wanted to name the company Daman in Oman. We were changing the name. When we were changing the name, we acquired the company and we wanted to change the name. And then the regulator did not accept because there was another company called Daman. Daman in Arabic means guarantee. So it's common for people. Actually, there is an insurance company in UAE called Daman also. And there is one in Saudi Arabia called Damana. Anyway, so for regulatory reasons, we had to use different names, but we use mostly three.
Interesting. Like, that's great. So yeah, I would say
But
that's
I'm
probably
sure there is in USA a company also called Associated Insurance Consultants. I know that for a fact. There are different associated insurance, which would not be us.
yeah, no, that's great. I think there's time for one more, like, and also like I see, like I received a little bit earlier from one of the participants who was, I think a lot of us are interested to see what is your personal kind of point of view in terms of what is the most attractive place, or what do you see the most investments coming in, foreign investments, into which of these countries? Because there's a lot of smaller countries, but it seems like almost like when you look at that, and also the first question pointing out to that some of these countries compete, right, for this investment. You're looking at Qatar, you're looking at Saudi Arabia, you see the World Cups, you see these events. What do you think? What is right now, in your personal opinion, the country who's trying to get the most foreign investments into the Middle East?
Look, UAE is still a leading country in terms of foreign direct investments, but definitely Saudi Arabia is a place to watch in respect of the huge projects that are coming. Saudi Arabia is by far the largest economy in the region. They are a G20 country. So their size of economy is quite similar to the size of economy of Russia's economy. So it's a big country. It's a country to watch in the future. I personally, I would also keep a close eye on Egypt
Hmm.
because now Egypt is I think yesterday they signed a strategic agreement with the European Union, and Egypt is becoming very quickly like the backyard of Europe in terms of manufacturing because
Hmm.
they have a qualified workforce, a qualified workforce, and they have cheap labor, cheap infrastructure. So, and they are building on this infrastructure. In the last quarter of 2023, they became, for example, the largest supplier of oranges, uh, 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 going beyond South Africa to Europe, and they are investing a lot, for example, in agriculture and manufacturing, a lot. So you can see a lot of plants coming and getting established in Egypt recently,
Interesting.
especially from France, Germany, and Italy.
Wow, that's great to know. That's something I would have known, even though, like I said, I personally was in Egypt a few years back, and I have to say it's a phenomenal country. Also, a great country to visit. Probably like with the most amazing sights you can ever almost ever see anywhere in the world. Maybe only comparison with China going back that far with that high culture, but that's good to know that they're also like having this kind of like manufacturing, which a little bit seems to me reminds me a little bit of Mexico and the US, like becoming a very similar relationship over the last couple of years and
In
intensifying.
the last 3 or 4 months, Christian, we saw a lot of technology firms without establishing, asking us for employee benefits coverage for programmers, software programmers in Lebanon and Jordan,
Hmm.
because the cost of labor is cheap and the
Right.
qualifications are really good, especially in Lebanon.
Interesting, very good. So here's comes one last one. I think this is something like I'm also like I think a lot of us are very interested to hear. I got a really interesting question. You're saying in terms of reinsurance support, how would you see current incidents happen in the Red Sea will impact on getting marine insurance coverage by Middle East insurers?
Okay, for the clients in the Middle East, uh, they now insurers are canceling or giving a notice of cancellation for the marine for the war risks. For long-term clients, they are still finding solutions, and we are still able to find solutions if the situation remains the same. But you know, with the situation is changing all the time. For programs, we are seeing a lot of notice of cancellations.
Yeah.
This is the
No, that,
current situation.
no. I like I appreciate your honesty. I think that's it kind of seems to be like very similar than we have seen, unfortunately, in other conflicts where we have seen similar developments in Russia and unfortunately also regarding the Ukraine, particularly from the
And
international
even for
markets.
political violence
Yeah.
in country like Lebanon now, where there are some problems on the borders
Hmm.
between Israel and Hezbollah,
Right.
we are still able to place political violence for fixed
Hmm.
assets. And we are seeing an increasing demand, but the premiums are incredibly high.
Yeah. No, I can imagine. So Walid, well, I think that's it's a great time to really thank you again for your time today. I think it was
Okay,
very
my pleasure.
insightful. I also would like to let you know, as the participants, there's a little bit of an exit survey. So please go ahead. It also we will decide also depending on your decision who is going to become up next, will be featured next, which region in our series around the world with TRC. Thank you so much. Like, hope to see you soon, Bali. Looking forward to seeing you in San Diego, and of course, hoping to see everybody, like whoever goes to San Diego for the rims as well over there. And yeah, it's been a pleasure again today. Thank you again, Bali.
Thank you. Thank you for this opportunity, Christian, and have a nice day and see you in San Diego.
Sounds good.